$5,000 as a debit. The credit to accounts payable. They didn't show accounts payable, but that would have been credited to accounts payable. There would be an account there for that. What the problem was concerned about is what balance will end in raw materials. Okay, then we get to the next part of the question. It said that $48,000 of materials was put into process, that they are using raw materials to go directly into the product. So when you see it says direct, that word direct materials, debit work in process inventory, and credit raw materials inventory. So what entry number 2 does is it adds to in process, because that's now what's being worked on, $48,000 of materials. It's not raw anymore, it's in process. The credit is to raw materials inventory. That reduces raw materials. So when we post it, we're taking that $48,000 out of raw materials inventory, and you see the credit for $48,000. The third part, it said that raw materials was used for overhead. So not to go directly into the product, it was used for overhead. So we debit an account called manufacturing overhead. Debit that for $14,000 and credit raw materials inventory for $14,000. When we post that to the raw materials account, here's the credit to raw materials inventory. There would be another account be for manufacturing overhead, and that would be debited. But they asked about raw materials. So the ending balance in raw materials is $38,000. How do we get that? The beginning balance was $45,000. $55,000 was added with the purchase. And then $48,000 and $14,000 were removed from raw materials to put in process. So you see the STI account? The left side, that's the debit. That's the plus side. The right side is the credit, the minus. So the balance is $38,000. What's important about this is that we put those, when we remove raw materials to put them in process, that we accurately put them or assign them to the appropriate account. So when we assign it to in process, that means we're working on that. That is a direct product that we could see. But some materials went into overhead, items not directly related to the product. And by the way, some of those could be the relatively small items, nails, glue, and screws, and so on. So questions on this one? Emily, how are you on this one?
I think it was Beth who had a question, right, Beth?
Oh, was it you, Beth?
Yeah, it was me.
Oh, I'm sorry. Sorry, Emily. Sorry, Beth.
You're good.
So, Beth, how are you with this?
I think I'm okay.
Now, when you say you think, you are not sure. So is there a way that I could make you a little more certain?
I think
Or
I
do you-
just have to read it over a couple times.
Okay. All right, that I get. That's what I was about to ask you. That sometimes you need to let it sink in. So what I want to make sure about is that you're good with the pluses and minuses, the debits and the credits, and that all assets are increased with a plus or a debit, which is the left side of the account, and they are decreased with the credit, the right side. So what we're trying to do is when we're asked for journal entries, we are trying to accurately record what happened. So what happened? They took raw materials from the warehouse. Well, first they purchased them. They put them into the warehouse. That was number one. Number two, they took them out of raw materials and put them into the factory, into the product. But the key is it's direct. It was going directly into the product. For number three, they told us that this would be part of overhead. So it would go into an account called manufacturing overhead. So Beth, you can think about it. If you have any questions, send me an email, or if next week you want to talk about it, we can.
Thank you.
You're welcome. All right. So what I'd like to do is continue where we were. Thanks. Okay. So we did go a little bit beyond what I'm showing you on the screen right now. But I want to go back to this because it helps explain where we're going with this. So on the screen, you see it's one of the steps. And what we're doing with this schedule, we know we have $8 million of overhead. So we've determined $8 million of overhead. Or we're estimating that we have $8 million of overhead. So what that's related to is all of the overhead activities, the activities that go on in that warehouse that go into making the product, but they're not direct. So they include purchasing, setting up machines, running them, assembling products, and inspecting the products. So we've estimated that the cost for those 5 activities total $8 million. And we've estimated the amount that gets associated with each activity. So for example, $1,200,000 was estimated to be the cost of purchasing materials. That can involve salaries for purchasers and whatever is necessary to purchase the materials. So we've estimated for each activity, the total cost, it's $8 million. We need to allocate that to each product. So the way we're going to do it, we're going to consider the cost driver. So you remember the cost driver. It's what drives the cost. It's what makes us incur the cost. So for purchasing materials, we've determined that the activity will involve 10,000, this is over the course of the year, 10,000 activities that are all related to purchasing materials. So we divide the estimated overhead cost of $1,200,000 we divide that estimated cost of $1,200,000 by the estimated driver, which would be 10,000, which gives us an estimated cost or a predetermined overhead rate of $120 per requisition. Every time we requisition, remember requisitioning materials, we want to take it from the factory, from the warehouse, and put it into the factory. We estimate that that will cost us $120 each time. We do the same thing with all of the other estimated costs. So the machine setups, we estimated that they would cost $1,600,000, and we estimate that it will involve 2,000 setups. Set up the machine 2,000 times. So the predetermined overhead rate is 1,600,000 divided by 2,000. Gives us $800 per setup. So we do that with each of these activities. We okay with that? Questions on it? Okay, so keeping this in mind, that we've determined the overhead rate for each activity. They are listed here. So now let's work our way down to our schedule where we allocate overhead between two products. So this company makes two products, a basic sailboat and a deluxe sailboat. What we need to do is allocate that $8 million. Remember the $8 million from the other schedule? That was the total estimated overhead. We need to allocate that to each product. So we take so we've listed the activities which are purchasing materials, setting up machines. Where does that come from? Right here, where you see on the left side, purchasing materials, machine setups. Okay, so we list those. They're all listed on this schedule. Then we take the cost driver activity. And we list that. So we've estimated that it's $7,000 for purchasing, I'm sorry, for the requisitions. So when we multiply to determine the amount of overhead that gets allocated to purchasing materials, we multiply $120 per requisition times the cost driver activity, that's 7,000. That gives us $840,000. So we've allocated overhead to purchasing for this basic sailboats. We do the same thing for the deluxe sailboat. The predetermined overhead rate is $120 per requisition. But the cost driver activity is $3,000 for the deluxe sailboat. When we multiply that out, $120 times 3,000, we get $360,000. So what we're doing is allocating overhead to each product. When we're finished, so it's the same process. It's this multiplication process. If you multiply the rate times the activity, that will give you the allocated overhead. The reason we have to do it per product, each product is different and the cost driver is different. As a matter of fact, all of the cost drivers are different for the deluxe sailboat versus basic. None of them are the same. So we have to calculate these for each one. And we're multiplying the rate times the driver activity to get the allocated overhead. When we multiply it out, our total overhead that was allocated to the basic sailboat is $5,020,000. The amount allocated to the deluxe sailboat is $2,980,000. Add those numbers up. They get that comes to $8 million. That's what we were allocating. So to get to the overhead cost per unit, we need a unit cost. We take the for the basic sailboat, the $5,020,000 of allocated overhead, and we multiply that by the number of units produced. So this is the number of units produced was given to us. That's what we were told in the factory. It's 5,000 units. We divide the 5,020,000 by the 5,000 units produced. Our overhead cost per unit for the basic sailboat is $1,004. For the deluxe sailboat, take the $2,980,000 total overhead allocated, divide that by how many deluxe sailboats were made. It was 1,000. That gives us $2,980 allocated to the deluxe. So when we consider the total product cost per unit, we take those numbers of overhead, 1,004 for the basic. At 1,004 is the overhead. We bring that down to overhead for the basic on our schedule. For the deluxe, 2,980. We bring that over, and you see it on the schedule here, 2,980. We're adding the overhead cost per unit to the materials cost per unit and the direct labor cost per unit. So now we have our total product cost per unit. We can use this, 1, to set prices, 2, to analyze how efficient we are in making our products. We can compare this to prior years. And what we're looking for is which increased, and can we identify why? Why did they increase? Because our goal is to keep them lower. Questions? So what we're doing in this whole situation is we're looking at the activities This is activity-based costing. We looked at the various activities. We estimated what the total cost of the activity is, and we determined a unit rate, and then we allocated that to the product. So this is activity-based. And the reason we use activity-based, it's considered more accurate, that it leads to better decisions. So that would actually be a good question. So those that do this online, here is your participation question. It is. How? And by the way, this could be a good quiz question. How does activity-based costing, ABC, lead to better decisions? So the decisions we're talking about, should we make more of a product? Or pricing, that's a decision. So let's talk about the answer. The answer is by breaking down the overhead to each activity, we can better analyze the activity. So it gives us a better means of analysis. Because we're analyzing each activity. Two, it makes us focus on the production process. So we better focus on production. And when we focus better, we can look for inefficiencies and try to eliminate them. Now let's talk about disadvantages, which again, it's another good quiz question and a question for online participation. Why or what are the disadvantages of using ABC? And they are, when we look, first I'll give you the longer answer and then I'm going to summarize it. The longer answer is, when we look at each activity, the purchasing, the setups, and we had 5 activities, that takes time. It costs money. In short, it can be more costly to use. ABC can be more costly. Remember, we're always looking to save cost. Number 2, the benefits of using it may not outweigh the cost. We're always looking, so this is a key. First, I'll let you write this down. The benefits may not outweigh the cost. In short, benefits are less than the cost. If it costs you $5 to save $2, you didn't save anything. And part of the trouble, you may not know that until after you've completed the process. So what do you do then? Well, what you did, but then you may switch in the future. Remember, this is a choice of a company of a method of allocating overhead. there's something on the screen. It says unitizing fixed costs can be misleading. I'm going to explain it, but I won't hold you to that because we have to get it more into fixed cost. But there are some costs that remain the same regardless of how many products we make. And that can be hard to put a unit price to it. It can be hard to estimate. But we'll save that for when we talk about fixed cost. Questions? Okay, I want to review this slide because I just have a little concern about journal entries. Don't ask me why, but I have a little concern about journal entries, especially if your accounting one was a little while ago, where you might not be all that up to date on debits and credits. So, how are overhead costs recorded when using ABC? Overhead costs are added to work in process inventory. And taken out of manufacturing overhead. This journal entry that you see on the screen, debit work in process inventory and credit manufacturing overhead. That journal entry happens when we're assigning overhead to inventory. So remember, an asset increases with a debit, and this is a debit. Inventory is increasing. The cost of inventory is increasing with this entry. We're adding the overhead into work in process inventory. The credit to manufacturing inventory. That's a reduction of manufacturing inventory. Are we okay with that? Any questions? On Tuesday, we spoke about 3 methods of allocating overhead. We spoke about plant-wide. We're only looking at the plant. Then that's one method. Another method is allocating overhead by a department. And third method, allocating overhead by activities. Which one we choose to use depends on the product we make, depends on how many departments we have. If we have very few departments, we could just use a plant-wide rate. We can use activities. We just went over the activities. I'll just emphasize to you, in each of these methods, we are allocating $8 million. The entire plant was $8 million. But if we do it by department, the total 2 departments, the total of overhead for the departments is still $8 million. And if you add it up for the activity, the total would still be $8 million. The difference is how we allocate it. The cheapest to allocate in terms of cheapest in that taking less time is plant-wide. So why would we do a method like activity? Because we have so many activities that cost us money. We want to analyze those activities to save money. So a general answer to why we do things in managerial accounting, it's usually to save money. We want information, we want to evaluate, we want to save money. So there are two reasons to allocate cost. Well, no, let me rephrase that. Let me say that for financial accounting, which is not our main topic, for financial accounting, we need to allocate cost because it's required by the accounting principles. But for managerial accounting, which is what we are focused on, we allocate it so we can make better decisions. We can use different ways of allocating for managerial purposes than for financial purposes. That's allowable. Remember, what we are working on in managerial accounting, it's not something that we give to the public. It's what we use to run the business. So we're concerned with internal reporting. And that internal means it's reporting for the managers. Our goal, give those managers the information they feel they need to make better decisions. Let's talk about the difference between a service department and a production department. The service department within a company provides services to other departments. So human resources takes care of benefits for employees. It helps employees with choosing their health care, with choosing or helps them with their withholding for tax purposes. It provides information about labor disputes. Those services, do they go into making the product? No. Those services, when human resources helps employees with their health insurance, that's not part of making the product. But it is a service to departments. So a service department is different than a production department. The production department makes the product. The service department provides other departments with a service. It could be accounting, human resources, computer support. So those are different. There are costs associated with each. Some companies will allocate service department cost to production departments. Keeping in mind, the cost of a service department, it's not free, it's costing you money. But it is part of running the business. So some managers will want that included in overhead. So why overhead? Because you can't run the business without that service, but it's not direct in making the product. The service department cost. the service department cost can sometimes be outsourced. So every cost, we as managerial accountants will consider, is there a way of doing it better? Is there something that we can cut or eliminate? And what's often done, companies look to get a specialist to provide a particular service. So they can get a specialist. There's a company, the name of the company is ADP, Automatic Data Processing. They provide services. One of their bigger services is tax services, that they will provide employees with pay statements, that they will collect withholding taxes and income taxes from the employee's pay and pay it to the appropriate company. That's outsourcing. The company's not doing it themselves. Should a company outsource? It's up to the company. But what they're looking for is, can they reduce cost? And is it more efficient and effective? So we can allocate the cost of a service department using a direct method. It's the simplest one to do. And all we're doing with the direct method is we're allocating the cost directly to a production department, but not to other service departments. That's a decision that management would make. So how they get allocated, they would use a system that they think best reflect who's using the cost. So if you have in a production department, you have two production departments. One has 20 employees and the other has 100. You'll allocate more cost of the service department to the department with more employees. Why? Because it makes sense. That is, unless you determine that one department uses more of those services than another. This is all background. So the slide asks the question, what is the hierarchy of cost and why do managers use it? So when we talk about the hierarchy of cost, we're talking about a grouping of cost. And typically, the cost can be grouped into facility level, which is, let's say, the factory, the product or customer level, a batch level, or even a unit level. So those are the four groups. So that the facility level, activities that are required to sustain the facility, we're grouping costs into that. We incur this cost regardless of how many products we make. So if it's something to sustain the factory, in plain English, to maintain the factory, we need the factory cleaned, the equipment operating, whether we're making 1,000 products or 10,000. An example of the cost, building rent, management of the factory. A product level activity. It's an activity that involves, I guess you're better off being in here than not with the rain right now, I guess. The product level activity are those that are required to develop, make, and sell the products. And these costs are incurred regardless of how many batches we make or units that we make. So let's just to expand on this. The cost of developing a product, to do research to develop a product, you incur that cost. It doesn't matter how many of the product you make. If you want to develop a product, you have to incur that cost. The batch level. These are activities that produce batches of products. And these costs are driven by how many batches we have to make rather than the number of units in each batch. So example of this would be machine setups, quality inspections. These would be batch level activities. A unit level activity. These are the costs to make the individual units. The driver of this is the number of units we make. The more units we make, the more materials we use. So that would be direct materials. The more units we make, if it's on a factory and that equipment is operated by people, then we have more direct labor. We're batching these costs. I shouldn't say batching, that was one level. We're considering these costs so we can analyze them. Analyze to save money. An important aspect of making a product is understanding the quality of your product. You'd like to know before your customer gets the product, what type of quality is it? By the way, you'd like to have an idea of that before you even set prices, because a higher quality product may deserve a higher price. So we can, again, group the cost of quality into 4 categories: prevention, appraisal, internal failure, and external failure. So what you see on the slide is the cost category and a description. So a prevention cost. So our preference to prevent the cost from occurring if we can. If that cost can be avoided, we'd like to prevent it, especially if it involves a defective product. So a prevention cost, it's the cost of activities that to prevent defects in products. So this cost can involve training of employees. If they're properly trained to operate the equipment, then hopefully we can prevent defective products. Another prevention cost, an inspection of raw materials. Before we put materials into process, we can do inspections so we know we're not putting a defective raw material into a product, because if the raw material is defective, the product's going to be defective. So an example of this, you've heard Frito-Lay potato chips. So their raw material for the potato chips, the basic raw material, there's others that go into this, but the basic raw material for making a potato chip is potatoes. So what they do is they order potatoes and they get them by the truckload. So the supplier drives those huge truckloads of potatoes into a facility. And before they accept those potatoes, they sample them. So they actually go to the truck and remove potatoes, and they put them into their process. They actually process them, that sampling, before they accept that batch of potatoes. They make chips, and they see, out of that sample, they make chips, and they test them. Do they meet their standard? And if they don't accept that truckload. In other words, they don't want potatoes that are, let me say, older, or maybe spoiling for some reason. Or let's say they are, plants can get diseases, that they have some disease. So they actually test it before they put it into process. There's a cost associated with that, and it's a prevention cost. It'll be classified as a prevention cost. So why do they do this? They believe that cost of testing gives their benefit of testing is greater than the cost. And their suppliers, they're willing to accept it. Why? Well, if you grow potatoes, and Frito-Lay buys a lot of potatoes, if they're not satisfied with how you deliver them, they find someone else. Okay, another category, appraisal cost. These are the costs of activities that detect defective products before they're delivered to customers. So what they do is they inspect finished goods. So before goods get delivered to customers, I'm going to stay with my Frito-Lay example. So they accepted the potatoes, they accepted that truckload, they made their batches of chips, they processed the potatoes, they put them in bags. Before they send them out to the purchasers, they examine the chips on a sample basis. They go to the bags. You know, when you buy a bag of potato chips, it has some air in it. That's to keep it fresh. They look to see that the bags are shipping out, that they have that air in it. Then they look for appearance. They don't want it to look bad. If you bought a bag of chips, or if you went to the store and you were buying chips and you saw that they looked like they were overcooked, you might not buy it. You want the ones that look the way you expect them to. They are looking to see that those products are not defective before they get sent out. If they find there are defective products before they get sent out, they will look to detect where the defects occurred. What they're looking for there is for an internal failure, and there's a cost associated with that. So this is a cost of activities from defective products, again, before they get delivered. What we don't want to happen is those products get out there and we get a reputation for bad products. We don't want that reputation with, let's say, the supermarket chains that are buying our products, and we don't want the ultimate customers to get used to that. There's another cost quality category, external failure cost. It's the cost of an activity that results from delivering defective products to customers. So if we deliver the defective product, there's a cost associated with making good on it. So staying with Frito-Lay, the cost would be when, let's say, the supermarket chain complains, replacing it for them. There's a cost associated with replacing the product for them, delivering more products to them. In effect, when they replace the product, every bag of chips that they sent out, it cost them twice as much. One, for the bags that were defective, and two, for what was sent out to replace it. That cost them money. So that's an external failure cost. If our product, if our products are computers, we put a warranty on those products. So a warranty, we promise for a period of time to either repair a defective good or replace it. There's a cost associated with that. We're looking to minimize our cost. Question.
The external failure costs, the money you put aside for like lawsuits and stuff like that, going through that category?
Good question. Money that we put aside for lawsuits, would that go under an external failure cost? Yes, it can. Because we incur that cost. Why? Because of the failure, the defect in the product, especially where the product harms someone. Going back a number of years, Samsung made a phone, and it was a very popular iPhone. And some of them, small percentage, they caught fire. Well, that's obviously a problem, and that could hurt the consumer. And they did have significant costs because of that. Bad lawsuits. Yes, that's the external failure cost. Good question. Questions about these categories of cost? So what the managers will want to do is consider which of these are most important. Are there any costs that they can eliminate? Here's a good question. How do we decide? This is a question for those online now, your third question. How do managers decide which quality cost should be used, incurred?
I feel like the most important fact of to figure out which one is the most occurring is to figure out which one seems to be the most prevalent issue for a business. Kind of like, it's more likely for there to be a prevention cost for something like Lay's rather with the being in the food industry because they have to be more cautious about it due to FDA regulations. While like it might not be as effective for like a furniture business, won't worry as much because it's not something that you're consuming as a health issue. It's more of just manufacturing the product, and they can sell defective products at a discount.
Absolutely. So you said a number of things, all correct. So it depends. By the way, the answer in finance, we're financial accounting, which is related to finance. But the answer to many questions is it depends. So what does it depend on? Depends on the things you just said, Max. So we're looking at which is our biggest problem. You know, companies don't have unlimited funds, and they can have a lot of pressures, and they can't always spend on what they want to. So how do they decide which to spend on? Well, like you said, Max, they can look at what's the biggest potential for cost. What could get them in the most trouble? By the way, when you have, and just in terms of considering how to manage a business, in a way, it's how do you manage your life? You're dealing with a number of problems, and you can't address all at once. Which do you address? The one that gets you into the most trouble. So likely the one that you address first. If you could, you'd like to get to all of them. You'd like to consider all of them. And that is time and cost consuming, with time and cost as a restriction or a restraint. So one of our considerations as we try to keep costs down, it's the time to analyze, which, and anytime time is involved, there's an associated cost, and the cost of implementation. Which leads us to a good quiz question. How do we address and evaluate cost? How do we address and evaluate cost? And the answer would be, in part, consider the time, how time consuming it is to do it. Consider how big so that's one, the time for analysis. Two, I'll call it the gravity of the problem. And what I mean by that is the gravity of the problem means how big is that problem? And then three, the cost associated with analysis and implementation. So in an ideal world, a business would address each of these categories and would work it into their operations. Well, let's say a company has a really good record of developing and manufacturing its products, where returns are few because the product is good. What they may decide is to limit their concern with external failure cost. And just as things go wrong, just pay for it. And that will be based on the cost. On the other hand, if based on the product, there's a lot of defects, we have to get right to the prevention cost. We need to know why those products are defective. And it could be something as simple as the training of those working on the assembly line. So in terms of how we use costs of quality to improve operations, we're calculating costs in each category as a percent of revenue. So you can see why, this sort of explains why we use, those that use activity-based costing, this is why. Because they're able to better measure cost. What we'd like to do is shift the cost away from prevention and appraisal. I mean, towards prevention and appraisal and away from internal failure. In other words, if it's likely to be cheaper to prevent a cost, so we'll spend more money on that. And the product quality is important because the greater the quality, usually there'll be a decrease in cost and maybe our product is more valuable. Questions?
I guess, I think the slide kind of said it, but like, so I guess the goal, like it says, would be to focus on like prevention costs. So like, I guess for businesses that don't really have like defective or haven't had like a record of defective products, or just say like their main focus would be on more of like the preventative costs.
Good point. So the question is, or statement and question, company that does not have poor quality, that their focus was likely on prevention. Yes. So if that's the case, what might they do? They might look to make sure they maintain the ability to prevent problems. So how do you do that? If you get new equipment, make sure the employees are well trained on it. What you don't want to do is have your good process fall down on you. So you'll look at that category of prevention to try to keep it where it is. But yes, that's likely an indicator of effective prevention cost would be few defects. Now, it could be that it also has a great design, which is why the design of the product is important. Another point. So anyway, yes, absolutely. A good point. The reason companies will spend so much time on design, they want to be able to make a product that's somewhat foolproof to make. So when they design the product, somebody also has to design the equipment that you make it in. You know, when you think about for a new product to come to market, somebody coming up with what that product can do, then they have to come up with the process to make it. And you want that process to be efficient. So managerial accountants will often observe production and they'll do it with engineers. And the whole point is to identify areas that you can improve. All right, good. Thank you. Questions? How are we, relatively speaking? We not too bad, we hope. Whoops. Oh, let's see. Let's just sort of introduce chapter 4. How do organizations use process costing to track production costs? So process costing, that's what the word says. Assigning costs based on a process. Where we make a lot of the same products. We use process costing. It's different. Well, let's compare it to job costing. In both of them, we have raw materials inventory, so we have an account for that. In both of them, we have work in process inventory. We have an account for that. And in both of them, we have finished goods inventory. Obviously, we have an account for that. Process costing can use several work in process inventory accounts. In a production department, well, each production department typically has one work in process inventory account. But when we add up all of those work in process inventory accounts, they will represent the total work in process for the company. Process costing will use a departmental production cost report to track cost. So in making products, we have a lot of reports. That is so small. I skip that. So our cost, we say they flow through accounts in a process costing system. This is similar to what we just went through, but when we say they flow through a cost, raw materials, work in process, finished goods, that's the flow of cost. So it's the same for process versus job costing in that they flow through accounts. Why do we need separate accounts? It takes more time. It gives a way to better analyze cost. The journal entries, which you see on the screen, they're the same that we've been talking about: debit work in process inventory, credit raw materials. What I wish the slide showed was that for initial purchase of raw materials. To take raw materials out of raw materials inventory, it first needed to go in. So the first entry should be debit raw materials, credit accounts payable. But then these are the entries where we take raw materials and put them to the various departments. So in journal entry 1A, raw materials were taken from the warehouse and put into the assembly department. The assembly department has a work in process account for inventory. The finishing department, it's a different department. It too uses raw materials. It gets its own account. Helps us keep better track of the materials, and it helps us evaluate the departments. When we pay those working in the departments, debit work in process inventory for the assembly department, credit wages payable. That's what was earned by those working on the assembly line. For the wages payable to those in the finishing department, debit work in process inventory for finishing, credit wages payable. We do the same thing with overhead. We allocate overhead to each department based on that department. When the goods are made, we take the amount, and typically, well, let's say these goods end up in the finishing department. No, let me go back a step. I want to go back to number 4. Number 4, debit work in process inventory finishing and credit work in process inventory assembly. What that does is when the assembly department is finished assembling, it ships the goods to the finishing department. So we'll debit or increase work in process inventory for finishing and credit work in process inventory assembly. We're taking it out of the assembly and put it into finishing. So the accounting records should reflect what the process is. When finishing is finished, we take it out of the factory and put it into maybe another warehouse for finished goods, debit finished goods inventory, credit work in process inventory finishing. We've added those goods to finish the inventory. Having that information, we can now tell the sales department, if customers want delivery, we're ready for immediate delivery for however many products we have in finished goods. So we are using this information to make decisions. When we sell the goods, there's an entry to record the cost of goods, to take it. Again, this is the flow of the cost. So those goods were in finished goods inventory. If we sell it, we have to take it out. We credit finished goods inventory, that reduces it. And the account we debit is cost of goods sold. Does anybody remember what kind of account cost of goods sold is? So my last question for online participants. What kind of an account? What kind of an account is cost of goods sold? The answer is, let's look at the words. It is the cost of what you sold. You used those goods to make a sale. You've used them up. And I like to emphasize, when we use up an asset, it becomes an expense. Cost of goods sold is an expense account. That could be a good extra point question. You know, an extra point, 1 point. So cost of goods sold is an expense. When we debit cost of goods sold, we're recording that expense of the sale. When we credit finished goods inventory, we're decreasing finished goods inventory. Questions? Okay, so I will have to send you an email as a reminder of this. For next Thursday, week from today, we'll have a quiz. 5 to 7 questions. Should take 20 minutes or so. I like to give it at the end of class, so that if somebody finishes right away, that you're finished and you don't have to wait for others. So we'll do some discussion before class. By the way, I'll be able to answer questions should you have them. What I'd like you to do for Tuesday, and I will send you an email on this, from chapter 3, answer questions 1, 3, 4, and 12. That's 1, 3, 4, and 12, chapter 3. And brief exercises 24 and 26. And I would hope that for next week or by next week, that your reading to be up to date on your reading would be through chapter 4. next week, let me know how comfortable, and this would be a good time to let me know if you're not comfortable with the journal entries, or journal entries we spoke about. I do want to give you some practice with them. But if you let me know in advance, then I can give you more practice than I would otherwise. If you have any questions before next week, send me an email. If not, I'll see you Tuesday. Hope you have a good weekend. Take care,
Thank
everybody.
you.
Thank you.
Thank you.
Thank you.
Take care. Thanks.